everyone. Good evening. You're watching The Money Show on ET now. I'm Mubina Zapasi. This is our Rise with India Primetime segment. And as always, The Money Show will be dedicated to making your financial planning process a bit easier. Well, let's tell you what we have lined up on the show today. We are going to be continuing our talks on taxes, especially because now there's lesser time for you to plan your tax-saving investments. 31st March, of course, is the last date, after which any investments that will be made will only be counted for your March 2021 taxation. So ensure that you make the requisite investments before 31st March. We'll help you to do that in the first segment. Later up, we will also be then talking about, we'll be talking about the deteriorating air quality in Mumbai now. Earlier, it was just a syndrome of the NCR region, Punjab, Haryana, but now Mumbai as well does see extremely poor air quality. How can you essentially protect yourselves from it? From a life insurance premium perspective, could you see your premiums rise as well? Or rather health insurance, pardon me. We'll be talking about that. And finally, in our Spend with TMS segment, the upcoming long weekend is ahead of us. And if you guys have not yet planned how you can productively spend your weekend, well, here on The Money Show, we are going to give you a gist of all the fun hideouts of your town, and that too, you can do so in a budget. First up, taxation. That's the topic that we'll want to discuss. And while, of course, I'm sure many of you guys may still be perplexed by all the announcements of Budget 2020, I think there's something that's more immediate, and that is the 31st March end of fiscal year. You don't have to file your taxes by the 31st of March, but you obviously have to make the requisite investments that will help cut down your income tax bill. And you need to do that before 31st March. So that literally leaves you with exactly 41 days. So we at ET now are obviously going to help you essentially axe the tax bill by making the right investment decisions. And you know what, folks, this may be the last year that you'd have to probably worry about this, because from next year onwards, you can simply just get away by paying a lower tax rate and you don't really need to make all of these investments. So we'll talk about that in just a bit. But first, let's address the more immediate factor of tax-saving investments with Karan Batra, founder and CEO of CharteredClub.com. Karan, thank you so much, as always, for joining us on The Money Show. So yes, there are so many investment options out there. And I think for the most of us, we are just familiar with Provident Fund, PPF and LIC, because that is something that almost everybody has. It's the favorite tax-saving tool of every individual out there. Would you as well say that, your PPF and LIC are the go-to tax-saving investment options, especially because any which ways your bracket is not very big. It's just 1.5 lakh rupees. So would you as well say that out of the plethora of options out there, a PPF would get your thumbs up?
Hi, Mubina. Good evening. So, life insurance is something that I think everybody should have, irrespective of whether they intend to claim the tax deduction or not. Life insurance policy is something which I would recommend to everyone. Coming to PPF, PPF is an excellent instrument, not only to save taxes, but also to maximize your wealth. Because first, when we invest in PPF account, we get tax deductions. Second, the interest that we earn, that is also tax exempt. So this actually falls in the EEE category, that is exempt, exempt, exempt. So when we make the investment, it is tax exempt, the interest earned is tax exempt, on maturity it is tax exempt, and it is also offering a decent return on investment. I think it is around 7.5%, which is a good return considering the current scenario. So PPF is a good option.
Okay, let's talk about the other options as well out there. PPF obviously is a good option because it's one of those few investments that are in that exempt category. But we have ELSS, we have even the smaller schemes like the Kisan Vikas Patra, we have NSC, we have, all of these schemes. If you could talk to us about those as well, and where would they be in your pecking order if you had to choose putting your money in all of these?
See, with PPF, there is a drawback, and that is that it comes with a lock-in period. So the duration of PPF is 15 years. The same is for Sukanya Samriddhi account as well. There also the interest is tax-free, but then it is a long duration account. For people who cannot commit for longer durations, they can think of opting for the NSC or the Kisan Vikas Patra or the 5-year fixed deposit as well. However, in these cases, what happens, although the lock-in period is low, but the interest earned is taxable. And in case somebody is comfortable with equity, they can also opt for equity linked savings schemes, that is the mutual funds.
Okay, all right. We usually talk about ATC because it's some of the most simple investments to understand. But there's obviously a whole plethora of other expenses and investments as well that you can claim as a deduction. Sometimes we don't even know that we are making these expenses, and then I can actually go and claim it. And they're more valuable as well because there's no, well, largely at least, there are limits for those as well. And they're over and above, of course, the 1,50,000. So if you could talk about those two.
Yes. So over and above the 1,50,000 under Section 80C, we also get deduction under Section 80D, which is for medical insurance and preventive health checkup. Now, if somebody is paying premium for medical insurance for himself or spouse or parents, they can claim a tax deduction. In case a person is less than the age of 60, the tax deduction amount is 25,000. If they are paying for their parents who are senior citizens or they themselves are senior citizens, then this will go up to, for senior citizens, it would be 50,000 rupees. Apart from this, there is another deduction which most of the people do it, but they don't claim it, and that is for preventive health checkup. So if a person goes and gets a health checkup done on its own, he can claim a deduction of 5,000 rupees for this as well. Now, this is something which very few people know, and most of the times they go for a health checkup but don't claim it. So this is something that all the viewers can claim.
Okay, all right, fair enough. So there you have it, folks. I think that's a lowdown of all the investments that you can make. And of course, Karan has shared with you all his views as well on each of these tax-saving investment instruments. So I hope this will essentially help you guys as well make a decision on where you could invest your money. You have about 41 days left. So, make a wise decision, and then of course go ahead with your making the investments, but make sure you do it before 31st of March. Okay, Karan, now I want to talk to you about the next financial year, because there things will change. In fact, people won't have to do this this last month rush of making their PPF payments and ensuring that they're up to date with their ELSSs, among other things, because hey, FMC Saraman says that, listen, don't bother doing all that, just pay me lower tax and you are good to go. You do not even need to claim. I mean, you obviously will not be allowed, rather that would be the right way to put it. You don't even have to claim all of these the investments, basically. Karan, ever since this has been released, we've been getting this one simple question. Should I opt for this alternative tax regime that FM Sitharaman has sort of provided? So, Karan, I'm sure it's not a very simple yes or no answer. So, I'm going to put it like this. What are the parameters an individual should keep in mind when choosing which tax slab to choose?
Okay. See, till the time there's a straight road, people don't get confused, they keep on going straight. Till the time there's an option to either go left or right, that is when people get confused. And this is what has exactly happened in this case. Now we have to choose whether we go left or whether we go right. And there's no right answer to this, because it would vary on a case-to-case basis. So if a person is taking the benefits of, I'm assuming everyone is taking the benefits of ATC. If a person has a home loan or is paying HRA or is claiming LTA, or claiming the other deductions, then the old scheme would be better. However, if a person is not claiming these deductions, then the new scheme would be better. So for this, one good thing that the income tax department has done is they've released an income tax calculator wherein the person can himself input the figures and see whether the old scheme is better or the new scheme is better. So it is something that would vary on a case-to-case basis. So for you, maybe the old scheme may be better, and for me, maybe the new scheme may be better. So the best thing is go to the income tax calculator, input the figures, and see whichever is working better for you, opt for that scheme.
You know what? My producer just tells me that our phones have been ringing off the hook. So let's just get straight to that and kickstart our Ask the Money Show segment. And do we have any of our callers joining us with, or should we just take email queries? Okay, you know what, let's start off first with the email queries. And of course, a reminder for all our viewers, you can call in 24990300, and any taxation related questions that you may be having, Karan Batra is with us. He will get those questions answered. So let me first take up a query we've received from Narayan Swami. He writes into us saying, I'm a senior citizen holding shares of a company in a demat form. Now, he's not mentioned public, limited or private, but I don't think any which ways from a taxation perspective it would have much of a bearing. He says, please let me know if tax will be deducted at source from dividends declared by the company if the dividend amount is more than 5,000 rupees. If so, am I supposed to submit the form 15H, which basically is the form you submit if you don't want the company to deduct taxes? Is he supposed to submit this form to the company or to the depository participant, that's the DP, to receive the dividend in its whole form? That's without deduction of TDS. Okay, TDS amount is just, it's over 5,000 rupees. I'm not sure why he's mentioned this 5,000 rupee limit. But yeah, anyway, in case if he's confused, it was actually 10 lakh rupees earlier. 5,000 is of course too small, an amount. But yeah, anyway, Karan, would they be deducting TDS?
So, under the new regime, which would be applicable from 1st April 2020, what they have done is that the dividend received is taxable in the hands of the recipient. And it says not only the taxable, even the dividend received, the company which is paying the dividend has to deduct TDS. And this TDS is applicable if the dividend paid is more than 5,000 rupees. So, if the dividend paid is more than 5,000 rupees, TDS would be applicable in this case. However, if there is some person whose income is non-taxable, they can go and submit form 15G or 15H to the company. So, in this case, it would be the company who's paying us the dividend. So, the form would be required to be submitted to the company.
Viewer was right. There is that 5,000 rupee limit, and hence he had this question, which is pretty relevant. All right. I hope, Mr. Swami, your question has been answered. Okay, first caller then today on the show, Mr. I.P. Singh from Mohali. Good evening, sir. Thank you for calling in. What's your query?
Ma'am, actually my query is related to investing in debt mutual funds. If I'm considering them to be tax efficient,
Okay.
and considering the current scenario for the change in the coming time of the interest rates, so would that be a good option? I have chosen out to invest in Kotak Dynamic Bond Fund or Axis Short Term Fund or HDFC Short Term Fund, debt fund for that thing.
Okay. All right. Karan, what would you recommend Mr. Singh do?
So, debt funds certainly are tax efficient in the sense that if we hold them for more than 3 years, the tax rate is 20% only, whereas your normal slab rate may be 30%. So, you are getting the benefit of a lower slab rate, which I completely agree with. However, debt mutual funds, the returns are not assured. It may be there, it may not be there, especially in the current scenario where there are a lot of companies which are doing default. All the debt funds may not be performing that well. So, you will have to do your research. Tax wise, yes, they are tax efficient. For investment purpose, I may not be the best person to recommend you the investments.
Of course, fair enough. I think when he meant interest, he meant in this whole interest regime and this, high inflation and low growth inflation in regime, what would the RBI do? So, but yeah, Mr. Singh, if you are a bit confused about what kind of debt mutual funds you should invest in, I'd really request you to log on to ET Now's YouTube page. We had done a whole discussion on what sort of debt mutual funds are ideal in the scenario and the interest rate regime that we are in. I think this was just done approximately at 7th Feb or 8th Feb around, and you can definitely look it up on our YouTube page. From the investment perspective, of course, Karan has given you the tax treatment. Okay, Jitendra from Bihar, हमारे एक रेगुलर कॉलर है, ही इज कॉलिंग इन. जितेंद्र जी, गुड इवनिंग. धन्यवाद, आपने फोन किया है. आपका क्या प्रश्न है?
प्रश्न है कि आपके स्क्रीन पर
जी
टैक्स सेविंग ऑप्शन में दिखाया जा रहा है किसान विकास पत्र
जी
और पोस्ट ऑफिस का MIS.
ओके.
तो हम दोनों स्कीम में जानना चाहते हैं इसमें किस तरह का रिबेट मिलता है.
अच्छा, आपको टैक्स सेविंग के लिए चाहिए दोनों स्कीम में, KVP और पोस्ट ऑफिस में MIS?
हाँ, इसी को समझना चाहते हैं कि उसमें किस तरह का कैसे मिलता है रिबेट.
जी, okay, all right. So Karan, he's interested in Kisan Vikas Patra and the post office MIS. So how would you help him out, and also if you could respond in Hindi?
तो इस केस में होता क्या है कि अगर कोई पर्सन इन्वेस्टमेंट करता है तो उसकी इनकम में से वो माइनस हो जाती है, और इन्वेस्टमेंट करने के बाद जो इनकम बचती है उस पर टैक्स लगता है. इसका ये बेनिफिट होता है. तो अगर आप किसान विकास पत्र में से फॉर एग्जांपल इन्वेस्ट करते हैं, मैक्सिमम 1.5 लाख रुपए, आपकी इनकम थी 10 लाख रुपए, आपने 1.5 लाख वहाँ पे इन्वेस्ट कर दिए, तो बाकी 8.5 लाख रुपए पे आपका टैक्स देना पड़ेगा. तो इससे आपकी टैक्स लाइबिलिटी कम हो जाती है. इन चीज़ों से ये फ़र्क पड़ता है.
जस्ट अ फॉलो अप क्वेश्चन करण, दोनों में फर्क क्या होता है, केवीपी और पोस्ट ऑफिस MIS? ऑफ कोर्स दोनों में रिडक्शन तो मिलता है, बट रफली इफ यू कुड आल्सो से कि इंटरेस्ट कितना मिलता है, रिटर्न कितना मिलता है?
So MIS is monthly income scheme, and as the name says, whereas KVP is like we give the money one time and we get it after a long duration. I think the duration right now is 8 years or 10 years, so that's a long period of time. Whereas in MIS, it's a monthly income scheme. So that is the main difference between these two products.
Okay, so monthly income scheme like an SIP, you would say? I mean, of course, it's not an SIP, but basically you put in money every month, right?
SWP.
SWP, okay. Okay, all right. तो जितेंद्र जी, आई होप ये आपको हेल्प करेगा. Essentially किसान विकास पत्र एक बार का एक इन्वेस्टमेंट है, एंड ऑफ कोर्स पोस्ट ऑफिस MIS SWP की तरह होता है. Okay, let's take on board our next query. We have Deepak Sharma from Shillong joining us on the phone line. Hi Deepak, good evening. What's your query? Deepak, if you can hear me, what's your question for our tax expert today? Okay, I think he's not being able to hear us. So let's do one thing. Let's move on to another email query that we have received. Vishal Shah writes into us saying, my father had passed away 13 and a half years ago, but I got a tax demand for a case that's 20 years old. Am I covered under the scheme? Now, when he says scheme, he means the Vivad Se Vishwas scheme, and he wants to know how could he get a waiver of interest and penalty. I think, Karan, it's quite surprising that a case that's pertaining to an assessment year that's 20 years ago is something that is resurfacing, and that too when the assessee himself has passed away. It's coming to the assessee's heirs. This whole Vivad Se Vishwas scheme, we had the Prime Minister as well say that the era of tax terrorism is over. Do you think that, the tax authorities will be lenient with him? Can he go for the Vivad Se Vishwas scheme? Should he go straight away for litigation? What are his chances if he goes for litigation, if he doesn't want to make any payment whatsoever?
So Mubina, just to apprise the viewers, usually it is not possible that a case which is 20 years old, we are receiving a notice for that now. Because in normal cases, it can only be 8 years back that a case is coming out for the past 8 years. Or in case a person has foreign assets, it is 16 years. In this case, I don't think the case has come. So what the viewer is trying to ask is that there was a case wherein the assessing officer levied a tax and the penalty, and they lost the case. Now, if you've lost the case, many times people go to the courts. They go to the higher courts. So in this case, the person is trying to ask that they are going to the higher courts. What is the benefits? So under the Vivad Se Vishwas scheme, what it says is if there is any tax case which is pending at any of the courts, whether that's the lower court or the higher court, you can get it sorted, you can get the dispute settled, pay the tax amount before 31st of March, and there would be no interest and penalty that would be levied. If you pay after 31st of March but before 30th June, then you will have to pay a slightly higher amount. So try to pay by 31st of March.
Okay, all right. I hope, Vishal, this will help you sort out this demand notice. But yeah, I think what Karan said made sense. It may have already been this existing demand notice of sorts that may have been sent. There'll be no fresh demand notice that will come from the Income Tax Department for assessment year 2000 or 2002 or anything like that, because there's that limit of 8 years. And of course, if you're foreign income, then there's a limit of 16 years. That means after 16 years, the department is not going to come back and tell you that, oh, tell me about this property that you own in XYZ country, or in the case of course, domestic income, then tell me about this XYZ income. There's that 8-year limit. Okay, let's take on board our next email query. Vivek Sundar has written into us saying, has the government withdrawn the grandfathering clause on long-term equities? Okay, brought in, of course, in 2008 by FM Jaitley. No changes, unfortunately, made in LTCG. But yeah, Karan, maybe for the benefit of our viewers as well, if you could tell us a bit about this whole grandfathering clause, and is there any change in that, or is there a status quo?
So there is no change in this. So what the law says is the grandfathering clause. It says that if there are any shares and mutual funds which were purchased before 2019. No, I think that's 2018. So in that case, what we do is the value as on 31st January 2018, that is considered as the cost of acquisition subject to certain conditions.
Okay.
So we will not be considering the actual cost of acquisition. The fair market value as on 31st January 2018, that is the value which would be considered.
All right. Okay. So that's a very important clarification as well coming in, when it comes to this whole grandfathering clause bit. And I hope the concept is as well a bit clearer for all our viewers. Okay, we've just received another query from Neeraj Kumar. He says, the finance minister says that seafarers are exempted, but the time period, some sources say, is exempted for sea. Okay, I think what he's talking about essentially is this entire change in the NRI rule. Basically, she shortened the time period, right, from 182 odd days. Now you'll have to stay, even if you stay for 120 days, basically roughly 4 months, you will still be considered a resident. Now, I think what Neeraj wants to understand is the clarification that the finance minister brought about when it came to seafarers. So I think he himself must be a seafarer, and now he wants to know what does it mean for him? When will he be considered a resident? When will he be considered a non-resident? So Karan, how would you essentially explain this? Because a lot of seafarers had this query, they put forward this query. So yeah, what's the clarification there?
So earlier the law used to say that if you are in India for 182 days or more, you would be considered as a resident Indian and you would be liable to pay taxes in India. Now they've reduced this period, and now it says if you are in India for 120 days or more, then you would be considered as a resident and your income would be taxable in India.
Okay, all right. I hope essentially this will help you out with your query, Neeraj. And yet another email query that we have received from Suhas Ingle. He tells us, I require clarity regarding the budget announcement with respect to income tax on dividend with the old regime option, if that is selected in the next year. Does the taxpayer individual get the 10 lakh rupee exemption on dividend income as was available in last year's income tax in the new proposal as well? And also, please confirm if all other deductions and rebates available in AY 2021 will be available without any change if continuing to stay in the old regime. All right. So basically, he wants to know if that 10 lakh rupee exemption option is there if you're getting dividend income, if you continue to stick with the old tax slabs, or let's just call them the existing tax slabs. And also, is there any reduction in the deduction or rebates if you continue staying in the existing tax slabs? Karan?
So under the previous regime, what used to happen was dividends was tax exempted in the hands of the recipient, and in the hands of the recipient, in the hands of the shareholder, it was only taxed if the dividend income is more than 10 lakh rupees. However, from next year, that is from 1st April 2020 onwards, dividends are now taxable in the hands of the recipient irrespective of the amount received. So that 10 lakh rupees thing, that is now gone. So irrespective of whether you are earning 5,000 or 10,000 or 20,000 rupees, dividends would be taxable. That 10 lakh limit is now gone. So that thing is clear. Moving to your second query with respect to changes in exemptions, there are no changes for the next year, and the deductions which were available for financial year 2019-20, the same would continue for financial year 2021 as well without any changes.
Okay, so one thing should be absolutely certain, regardless of the amount of dividend you are receiving, whether it's 100 rupees or even 50 lakh rupees, it will simply be added on to your total income, and then accordingly, based on your total income, you have to pay taxation. So it's not exempt. There's no 10 lakh rupee limit, etc. Now the entire dividend income will be taxed, and whether you're in the old regime or the new regime, the treatment remains the same. That's extremely important to understand. Okay, well, on that note, all right, Karan, thank you so much as always for joining in and helping all our viewers out with their questions and queries. If we've not been able to take up your query today, don't fret. We'll be back next week with another episode of The Money Show. For now, we will take a very short break, but when we return, we will be talking about the recent buzz, that's the poor air quality index in now parts of Mumbai as well, which up until now was still not so susceptible to the winter-related pollution conundrum that the NCR region used to face. Now, how could that impact premium amounts when it comes to your Mediclaim? What sort of Mediclaim as well should you take? We will be talking about that.